So, Jim, we always love to have you because you give us a great read on what's going on in the Chicagoland area and the Midwest in general. I want to go back to your results from earnings about a week ago. What drove that loan growth that we were just talking about right there? What kind of loans are you seeing grow?
We are actually, it was mixed between both commercial industrial loans and commercial real estate loans. Pipelines are actually up meaningfully year over year. So I would describe, earnings reports for not only Old National, but for the industry as cautiously optimistic. Despite all of the headlines that are out there that are fairly negative, clients were still wanting to do business and still, asking for borrowing. So I think for our industry, it was a relatively strong quarter.
Right,
a little bit weaker than we would have anticipated when we started the year, but a relatively good quarter nonetheless.
All right, so relatively good. Are you saying it's relatively good just because of some of the uncertainty from tariffs, from trade, the fears of an economic slowdown, or was there something else?
No, I think it was relatively good. I think the other thing that the industry was able to do, and Old National certainly did the same, is we controlled our costs, right? So that's one thing you focus on. And we were able to manage our margin through lowering our deposit costs. So all of that across the board for Old National was strong, and the industry as well.
All right. So you mentioned that you were optimistic about what's going on, but also cautious. So I'm just looking at your provision for credit losses. Year over year, that increased quite significantly, up 66%. Why did you make such an increase when it comes to those provisions?
Well, our forecast for our provisions are driven by future economic activity. And so I think we're taking into account, given that uncertainty, given the global trade that's likely impact, we went ahead this quarter and took some extra reserve based on that. So we are anticipating that future forecasts will show a little bit weaker, and therefore we wanted to go ahead and provide up front.
Where are you expecting that weakness? Is there one part of your business in particular that you're expecting to see that weakness?
We're watching, obviously, anybody that does an international trade, anybody that's going to be affected by the tariffs. The agricultural sectors and other sector, we're concerned about. They're having a really tough year. The good news is the agricultural sector is really they're coming in with really strong balance sheets today. But nonetheless, there is softness this year that we're concerned about.
All right. At the same time, as you're worried about some softness coming up later this year, you're trying to grow. Actually, you're expecting a deal to close maybe even later this week. The acquisition of Bremer Bank. It's a private bank up in the Minneapolis area that you're acquiring. What's the goal there? I mean, there's a lot of talk about M&A in the banking sector under the Trump administration. Did you see looser regulations? Is that what gave you the confidence to do this and keep going forward with it? What's the goal and what's the outlook with this acquisition?
Yeah, great question, Frank. For us, this is really about building scale and density in markets we care deeply about. In the upper Midwest, the Twin Cities specifically. It takes us into North Dakota, which is a new market for us, and builds more scale and density in Wisconsin. This is a great opportunity, great timing from our perspective. I would say that the regulations really haven't changed. I would say that the conversations are healthy and constructive, but it's the same regulations that apply today. Again, we were really blessed to be able to get pretty quick approval, as we have with our other partnerships. And so for us, this is just a continuation of what we've been really good at, which is finding great partners, going into those communities, bringing the types of services that we're so known for, that passion for our communities, that passion to serve our clients. And this is really a nice extension of that. $16 billion of total assets for us, and the Twin Cities brings us to number 3 in total market share. And so just really a strong opportunity for us.